Some things are starting to become a little more clear with today's price action. Let's go ahead and validate what could be happening for the following sessions. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an AMC technicals and raw price action thread of analysis on this Hump Day Wednesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's go ahead and dive right into the charts. Okay, so we're looking at AMC on the daily chart here. Okay, so we already touched on the fact that we came up and tested our macro scale broadening descending wedge resistance, right? So it's fine. We have to do that. Remember that we are breaking out of a smaller time frame broadening descending wedge. Okay, so upon that breakout, the usual thing is actually to break out, test a geometric level at a resistance, come back and potentially test a newly converted resistance into now a support before a continuation onto the upside, right? So the price action is moving the way it should be, right? So now, based on today's price action, though, there's it actually opened up the potential to maybe opposed from yesterday's analysis, a higher floor, okay, instead of such a lower one. Of course, the lower one is still present and is still in play, but because of a few other things, we have to consider the possibility. Okay, so actually, let's move on and continue, and we'll get there eventually. Okay, so what we're looking at here is the hourly volume weighted average price. So this is VWAP. Okay, so what you're looking at here is that you can see the relevance over what's happening out. I mean, every single iteration we've actually tested, and we're knocking at the door at that VWAP, right? So we're still below it, and this is an essential tool for day traders actually. So long trades usually happen when we break above VWAP, right? And then we can actually maintain the upside of VWAP and then continue on. So then now short positions usually open at a break below it. Right, so it's a strategy. A lot of people use it just the way it is. A lot of people, some people use it as anchored. There's different ways to use this volume weighted average price, moving average, right? So let's go ahead. I just wanted to point out that we're still in fact below it, and we're using it as a form of resistance. And to tell you the honest truth, this could be validation that it is a valid resistance before a continuation to the way down. Okay, so now let's go ahead and move on to the next. So this is what we were talking about, to the next chart. Sorry, this is what we were talking about regarding the bullish engulfing, right? So we barely got an upside move on that. This is a 2-day iteration, right? We're on the 2-day chart. What I wanted to point out here is that there could be a limited downside based on the support of the RSI. Okay, so which means that in essence, it probably is going to make a smaller continuation to the way down and bounce, similar from that to where we're facing this 14-day simple moving average. So upon bouncing this, then we would realize the bullish nature of this bullish engulfing candle. Okay, so let's go ahead and move on and continue building these puzzle pieces. Okay, so the RSI is actually where I want to continue. So this is a 30-minute immediate short term, still suggesting a little bit of downside, right? This is more along the lines of consolidation though. So we can't use that as credible. Let's move on and look at the 4-hour. Okay, so the 4-hour is actually right at the junction, right at the border between the bear weakness percentile and the bull weakness percentile. Okay, so this also suggests some consolidation. And also, please notice that 14-day simple moving average is ever so slightly bearish and still suggesting sideways, right? It starts to get a little more bearish on both of the 6-hour and the 12-hour. Okay, so it's fine. This is getting pulled. You see where the RSI signal, the purple line, is laying? It's at 51.53%. So usually when we're within that gravitational zone of this of any of the percentiles, when we're at that gravitational zone, we'll get pulled to the downside. And what validates that is actually not only the 12-hour, but more so the daily. So the daily is suggesting that limited downside as well, just like the buy daily. Okay, so the reason we're looking at the upper term time frames, like, let me see what the 3-day is saying. Okay, yeah, the reason why we're looking at the bear weakness or the bear pressure kind of slowing down on the 3-day and especially on the 5-day is because this is the movement or the pivot of the RSI signal is contingent upon making the correction via the daily or the bi-daily RSI. Okay, so that bounce that we're going to get from that 14-day simple from both the daily and the bi-daily would essentially start to pressure the upper term timeframes pivot towards the upside. Now I can actually get into the targets. Okay, so if we're talking targets, it's very, very likely that we can actually face a bounce from not only the 30-day exponential moving average, but also because it's located at the 2.618 golden mean at about $6.11. And the range that I would give you, which is highly confluent with the wick high of this candle here, the wick low of this candle, the opening of this candle here, the wick low of this candle is also in line with the 2.272 at $6.18. Okay, so this is essentially the range that I'm looking for. I'm not quite sure yet if this is going to be the bottomed out range before we face that great bounce, right? Because we still have the SMA 10 and the EMA 7. Let me see. Yeah, the EMA 7 and the SMA 10 above us. So we could still face a rejection from these two moving averages upon facing a bounce from this area. So what I'm trying to say is that, I mean, if there are going to be day traders trading this short term, very short term, I'm talking about scalp, right? There is the potential to gain, let's see, about 7%, 7 to about 7.5%. For a day trade based on a potential entry or scalp from $6.11, right? So I'm just saying that could be a short-term scalp followed by take profits, and then this thing would continue to the downside. I want to point out the relevance of the SMA 200, which is a 200-day simple moving average, with the 3.618. Okay, so that's at $5.91. So there, if it still goes down to $5.91, or even going down to the relevance of the 4.236 at $5.79, where the 50-day simple moving average is still fine. In all relevance, 569 is my bottom side target, which just so happens to be the 4.618 at 570. Okay, so lots of rhyming, and I'm taking this inverse fib from today's 12-hour candle, the last one. Okay, so the target that we were looking at yesterday, high relevance, and it would just happen to be the highest value of the golden mean of the 4.618, right? So that's kind of what I'm looking at for AMC, okay? But we are expecting a bounce here, though. Okay, so if it does face enough thrust, because we have been using this area, it could be considered an inflection point as well. Okay, especially that we're in the 12-hour time frame. If we do use this area as a bounce to the upside and continue on, then so be it. That's great. So then we were able to locate it, right? So we just have to monitor how the momentum is moving throughout the day, of course. So yeah, but with that said, guys, just remember, I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, you guys, I need you to do your own due diligence and everything will be just fine. But with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.